As you can see, today on the Trading Bell, we are at the Standard Chartered Kenya headquarters here in Nairobi. And of course, Standard Chartered recently released their financial results for the year 2019. Today on the Trading Bell, I will be speaking to Kariuki Ngari, the Managing Director and CEO of Standard Chartered Kenya. I want to get into the numbers and of course, what is the bank doing to deal with the effects of COVID-19? All that and more coming up, but first, do take a look at his profile.
Kariuki is an accomplished career banker with over 23 years of retail banking experience. He earned his recognition through successfully transforming the consumer banking divisions of Standard Chartered Bank Kenya and Standard Chartered Regional Africa. A seasonal financial professional, he has held various senior leadership roles across the industry. Prior to his current role, he was the Global Head Retail Distribution for Standard Chartered Bank in Singapore. There, he was instrumental in formulating global strategies in building the future of retail branch and voice and virtual landscapes through digitization of the physical channels and revision of branch models and standards. Prior to his global role, Kariuki was the Regional Head of Retail Clients Africa between 2013 and 2015 and the Executive Director Kenya and East Africa from 2009 to 2013. He has also held senior positions in Barclays Bank of Kenya Limited.
Thank you for making time for us.
Thank you.
So let's get right into the numbers. You had a profit after tax of around 8.2 billion shillings, I believe. In terms of revenue contribution, we saw 45% was retail banking. Give me a little bit more about, these numbers and how we arrived there.
I think when we look at our revenue mix-up, if I just thought about the revenue mix-up, obviously retail is our biggest business, and 46% of the revenue of those numbers is from retail. So it's telling us that our investment in the digital space is starting to pay off. So because we've done a lot of investment, if you look at our big investments on technology, a lot of that, especially on the mobile banking, that's on the retail space. So retail had a good year. Mm-hmm. Commercial also had a very good year. It turned around from a loss making in 2018 to 2019 last year. Commercial turned around and made a profit of just about 540 million. And this shows the quality of the origination, the clients that we are starting to book, we're having conversations with, and them choosing to start banking with Standard Chartered. I think that's a big plus for commercial. And then finally for the corporate, a challenges. They had a worse year compared to the previous year, but still a respectable performance from the corporate division. So when we look at overall, we're very happy with the return. The revenue was flattish, but about 1%. Cost was 7%, and that 7% is mainly around technology. The investment we've done on the technology space, whether it's on the systems that we've introduced to facilitate the mobile banking, or the investment that we've done on cyber security, or the investment we've done in training our people. If you strip those out, cost normal BAU cost is flat. So we are very pleased with the results, the quality of the profit. We're very pleased with that.
Okay, and like you mentioned, and as you did during that live stream as well, that one of the risks that has been identified is cybersecurity, and training of people is so important. How far does that range, and what people really come into that net, and how extensive is that?
Cybersecurity, one of the most important areas is awareness. That's really, especially with the people, the front line. For an organization that is heavily reliant on technology, you have to make sure that your staff are very conscious about the emails they receive, the emails they send, the way they send data, because we deal with a lot of data, and this data has to be protected. So the first place where we've really invested in is training our people to be aware about the risks, what to look out for. So that's very important. After you've done the training, people are aware, they are conscious. You also have to build the systems, the capability, the systems that you've got to make sure where you are having those systems, they cannot be accessed easily, that they cannot, and even if they cannot be accessed, and then the security for the customers as well. How do you give customers the comfort that when they are doing, for instance, whether it's on mobile or on the desktops for our corporate clients, they are safe and the security there. So in terms of the security improvement is another area that we've continued to invest in. And I see these are an area that we're going to continue investing in. I think in terms of cybersecurity, it's like any crime, you know, people get more and more sophisticated. So for us, it's a question of you never stop. You always stay, how do you make sure that you're one step ahead to protect our data, to protect our clients, and most important as well, to make sure that the banking is a safe environment and the new way of banking, clients can be comfortable using it.
Okay, and so when we talk about security of people and in terms of course, technology being shored up as well, now let's talk a little bit about the fact that, of course, COVID-19 in Kenya and the measures that the CBK has taken. They did recommend that the transfer charges when you're moving money from your mobile wallet to the bank is removed. So when banks did comply with that, of course, earlier, you know, what sort of thought process was that in terms of, okay, who is bearing the costs? What are the logistics here and more? Can you walk us through that?
I think the first thing that, because this was an agreement, I mean, it was a discussion in terms of the central bank, what are the practical things that as banks we can do very, very quickly? And
Yes.
it's not just banks, even the money service providers like Airtel, Safaricom. And so the question was, how do you then help people not use cash? And then when you think through the way people think is, if the cost is high or the limit is too low, because we know the reasons why you probably, if you're doing a transaction above 70,000 prior, you had to do it through other channels. You couldn't do it at M-Pesa. So it was looking at, can you look at the limit? That was the first logical step to look at.
Yeah.
And then the next logical step was to look at is can you facilitate this, but by waiving the fees? And we are absorbing that cost. We are not, the cost doesn't mean the cost is still there. We are absorbing that cost as part of how do we contribute to making Kenya a cashless economy. We've made strides, but there's still a lot of pockets of a lot of cash being used. So if by doing this action, we can be able to elevate use of non-cash and we can go to a cashless society, I think it'll be a big plus for us. And then if you look at, if you take in terms of the cash, which we have to operationalize, because there's still some businesses that cash will still continue operating, and we are working now through the logistics of how do you, if you can use the word, quarantine the money, because when the money comes in, we know that from the scientists they are saying the virus, especially on paper, can be still active for 24 hours. So how can we quarantine the money for maybe 3 days, and that we are working through the operations to how do we operationalize that? How do we bring that to life? And it's something I'm sure we'll be able to come up very, very quickly with a solution for. But I think the biggest difference is going to be if the Kenyans and other consumers can use alternative forms of payments, and mobile money is one, credit cards is another, debit cards is another. All those tools are there. They are very, very convenient. This is the way to deal with, and you can operate in an economy. There are countries in the world today where they've gone completely cashless.
Yes.
So it's possible.
True. So when we talk about the economy now, because, you know, a lot of people are saying that, yes, we've taken these measures when it comes to banks, but what about just reducing the financial burden for Kenyans? Because if they have to stay home, how is it that they're going to make a living? How are they going to pay taxes and the likes? So there are, you know, recommendations for what the government can do in order to make sure that people are not hit as hard in terms of the financial repercussions. What would your thoughts be on that in terms of the measures that they can take immediately, if possible, to do that?
I think what I would want to say is I know the government, they've intimated that they are consulting, and they will come up with the measures, because that's very, very important. So I believe at the appropriate time they'll announce those measures, which will be a relief for, I mean, it'll be good for everybody to participate. But if we come to the banking sector, is to say what can we really do? And I've talked about the issue of cash. That's very, very important, because that was immediate. Yeah. But also the issue of facilities, because people have credit facilities. If their businesses are disrupted, they could be their credit facilities, there'll be disruption on that space. So that's another area that the banking sector we have committed to do. And at Standard Chartered, we've said we're going to look at all these cases on an individual basis, because it will all be different. You cannot have a blanket approach to all of them, because some will be affected more severely than others. So some may not be as impacted as severely. So it's having the conversation with those clients, having the conversations, whether it's the clients, whether it's a corporate or the individuals, to make sure that whatever agreement we come to is good for them. Is good for them. That's something that we can do. But obviously, as a guideline, the governor has given is if up to 12 months moratorium, or restructure the loan by an extra 12 months. Those are all possibilities that we can have conversations around individual clients or the corporates, depending on their individual circumstances.
So again, a case-by-case basis then.
Yes.
So when we look at the economy as a whole, your predictions in terms of perhaps in the future, because we know supply chains are disrupted and the likes, is there really any way that businesses can then bounce back once all of this does go away? And you think maybe what would be the contingency in that situation?
It's interesting when you think about it. If you had asked me that question in January, the answer would have been very different. I think the reality is that we are in a situation which is unprecedented. Every day we wake up, look at how Asia started the day, or how America has landed. You're like, wow, am I living in the real world? Definitely there's been a lot of disruption. But we remain optimistic that the recovery, it could be V-shaped, that the recovery is just going to be as swift, because it's not a financial crisis, and we are trying, as you've seen governments around the world, and definitely in Kenya, is how do we make sure, and I'm sure both the monetary side and the fiscal side, is to make sure it doesn't become a financial crisis.
Yes.
It remains a health challenge. I think right now, it's primarily a health challenge. But if you don't tackle it well, it can lead to economic collapse and becomes a financial crisis, which is a lot harder to deal with. And that's why you're seeing the fast response. But if you ask me, when we speak to our suppliers, for instance, and our customers, they're optimistic. Right now it's one of those, you're like, okay, but you're optimistic that, for instance, if for instance, after the 30 days, the hotels, if the conferences, we start having conferences again, then you can see the hotels picking up. If after the 30 days, and we've seen in China, for instance, a city that was completely locked down like Wuhan is back to 70%. The factories are back to 70% production. So you can see it's possible. If you manage it well, then you don't prolong it. Then you can be able to, and that's why we have to go through the very short-term pain so that we contain it. And then the recovery from what we have seen in other markets like China, which right now is recovered, it tells you that you can turn very, very quickly. But if you don't take actions very quickly, you prolong it. And I think there lies a danger, because if you prolong it, then, and in our country, how long can people stay at home? I think those are the challenges which the right authorities are dealing with.
When we talk about working from home, which is one of the recommendations, of course, even President Uhuru Kenyatta had mentioned this, what sorts of steps have you taken as the bank in order to try and make sure that maybe some of your staff is actually able to work from home, for instance?
There are a couple of steps that we've taken. One of them is make sure that they've got laptops. Okay, they've got, and we have got work-enabled laptops. And our laptops, you cannot serve the internet with them, so it's a work-enabled laptop. And then there's a device that we've got in the laptop that allows secure access to the system. So to the banking system, we have to make sure that that is available, that secure access is available, so that you're not you can only work within our environment. Yeah, and also that device allows us to monitor what you're doing with it. So it's a very secure environment. I said, for us, data is very, very important. You want to make sure that even if you're working from home, customer data is protected, and making sure that our staff know that obligation. They have an obligation to realize, because you're working from home, you also have an obligation, and matters of data leakage is going to be taken very, very seriously. So that's another action that we've enabled, and then also we facilitate that by availability of bundles, and most of the staff that who should work from home have got work provided headphones. So work provided headphones, and then they've got bundles to be able to access the internet. So those are some of the measures that we have taken.
So as we were just chatting before we actually started the interview, you were telling me about the percentage of your workforce that is now able to work from home. What is that like?
I think we're going to get to 50% if we can get most of the people, especially in our head office. We can be able to work from home. That would be great. The branches is a different story. The branch is going to be informed a lot by the traffic.
Yes.
And we've seen that has reduced this week, definitely. Definitely this week it has reduced. We'll see how that pans out in the coming week. But we also want to be in a space to say we also need to look at the branches, because it's a health issue. If something happens there, what do we need to do, and how do we operate in that environment? So we're also conscious that we have to be conscious about that as well, and we have to look at how we can facilitate that as well.
So moving away from, just the news of the pandemic and of course the details surrounding that, if we take a bird's eye view at the banking sector in Kenya, we have seen a lot of consolidation. We've seen a lot of banks that are moving to come together to form a larger entity over the past year, especially 2019 and mid-2018. We saw that trend. Of course, you have decades of experience in the banking industry. You've worked in Singapore and the likes. What do you think in terms of where we're heading as the banking sector in Kenya then?
It's only I think it's good when you talk about consolidation. It's good to have stronger bank institutions because then it helps the entire economy. I think that's a mandate. That's a drive that the governor has been driving very hard, especially not forcing the consolidation, but normal consolidation where banks are coming together. So it's good for the industry. It's good for the country as well. It's good to have solid banks, and it's good to have fewer solid banks that can help. I think, and I think so. It's not just for the industry, but for the country as well. And I think naturally that's the future. We've seen countries like Nigeria. At one point, Nigeria had over 100 banks. Now they're down to 22 banks. So it is good for the industry, and that's the future.
Okay. Yeah. And there's great uptake of mobile loans from Kenyans. It almost seems as if that seems the easier way than the traditional loans. Do you think that that's a space that perhaps it needs more sort of regulation?
I think it's in terms of, I would want to say is how do you ensure that the people, because when you look at, and the data is there, when you look at the number of people being listed, they are in thousands. So they tell you something that is not right. And it's our responsibility to make sure how do we get that right. If you look at the statistics also telling us a lot of young people are being blacklisted. Now when you think about the way this country is going, very soon to do anything you'll have to get your credit reference.
Yes.
Now if you're being listed at 25, what does that mean for your future? So it's something that we need to be aware of, that we don't do irresponsible lending, and then we do irresponsible lending, you list masses of people because you're messing up their future. If you look at jobs, for instance, jobs in the government, there are quite a number of jobs that say get a CRB reference, a clearance certificate. Now if you got listed at 25, it's very difficult to go and explain why you got listed when you're so young. So it's something that we are conscious of. I think for us as Standard Chartered, we strongly believe in responsible lending. We believe in responsible lending. So we'll always challenge to see, does the business really exist? This money that you want to take, what is it for? If it's an individual, it's always good to encourage that there's an underlying asset of why you're borrowing. Because that's important, because that's where then you create an environment, you create a country that is sustainable, that debt market that is sustainable, and that benefits everybody else. So mobile lending was new, it was new in this market. I think it's time where we need to look at and say, are we treading in the right direction? Is this how we want to go about it? I think it's an important question that we need to answer.
True. When we talk about Standard Chartered and your plans for 2020, I'm sure, of course, now there are some disruptions in that particular vision, but maybe you can just give us a glimpse of what that was like anyway.
I think in terms of, I've said we've got 5 strategic priorities. The first is transforming and disrupting with digital. In terms of our investment in the digital space, in terms of our investment in technology, that is going to continue. We don't see, even if there's a temporary pause, I wouldn't call it stop, because you can't stop it. It's an area that we're going to invest in. And also we believe that how do we facilitate even more how do we even facilitate more technology-based businesses? We still have to look at, if you take for retail, for instance, we still have work to do on the lending side. A lot of, you can open an account today with our mobile, but you cannot apply for a loan on mobile. So there's some work we need to do there. We also need to do work on the business banking side. You can apply on paper, but you cannot apply on mobile. So there's some work we need to do there. We've done a lot on the wealth space. So in terms of the investment, whether it's on the insurance, we've all put that on mobile. But in terms of, so there's work to be done. And that's the same thing for the commercial side, the commercial and CIB side. There's still work to be done, especially in the what we call the APIs, where there's connectivity between ourselves and the individual companies. So that is going to continue. The second priority for us is on the corridor. We call ourselves a network bank because we are the only bank in this market that is in Asia, the Middle East, Europe, and the Americas, and within about 16 African and 16 African countries. And we are starting to see businesses coming from Asia wanting to invest in this part of the world. how do we facilitate, how do we help them? Because we understand we're in both of the countries. We're also seeing businesses in Kenya becoming regional. They want to move to markets like Tanzania or Zambia or Uganda, markets we have a presence in. How do we help them? Because today, most of those companies, they want to have one treasury, they want to have one finance manager. So how do we help them facilitate that? So the corridor business is very, very important for us, and for us strategically, it's an area that we're going to continue focusing on. When you talk about wealth investment, giving Kenyans an alternative. Before, when you wanted to save your money, you only thought of a savings account. But now, giving you the platform to invest not only in a fixed deposit, you want to invest in treasury bills, treasury bonds, you want to go offshore and in offshore markets, we can facilitate that. You want to save via insurance, bank assurance, farewell insurance, home travel, we can facilitate all that done on mobile. So that's an area that we believe will continue driving forward. And when we see the returns from that area and the growth that we have seen over the last 3 years, it tells us it's something that has resonated well with our clients. It has resonated very well. From less than 19 billion shillings investment, we ended the year at 69 billion shillings. That's phenomenal growth, giving the Kenyans the alternative. And then overall, how do you then lead to improved productivity? If you have to, once you invest in technology, the return has to be, the clients have to see, oh, there's a return coming in by you not charging me more. You're not always rushing to increase your prices.
Yes.
That's important. So improved productivity is also an area that we need to track with all the investment we are doing. That's an area we focused on well.
Well, thank you so much for joining us today, and of course, giving us a lot of insight into Standard Chartered, the numbers, as well as some of the measures, of course, that you're taking with regards to the pandemic. So we really appreciate your time.
Thank you very much.